This meeting's being live streamed. I never know when the YouTube audience joins us, so I'm going to just assume that it's happening as we speak, and then we're going to go from there. What? Oh, hold on.
What's the problem? You are live on YouTube right now.
All right. You guys can't see it, but I had something that was, I probably like an idiot, just like I had a website that popped up and it was like the old YouTube that we just did. So it was playing in my ears. You guys couldn't hear it. And I'm like, too many sensory things happening all at once. So anyway, you said we are live. We're actually really live on YouTube. So we've been playing with some technologies, y'all, and I've been like a kid on Christmas Eve, unwrapping all these things and getting ready to share them with the world. And we are getting ready to substantially upgrade the quality of these shows and of the broadcasts, and it's going to be really fun. And we can have a countdown timer, so I don't look like an idiot at the beginning of the stream, so not really knowing when it's going to go live. And in fact, I'm going to test some of that technology later today. And if y'all happen to see that show up on your YouTube stream and you want to join and participate in that testing, it's not going to be anything educational other than for me learning how the technology works. But we're going to be able to engage with you guys at a much deeper level. So if you want to participate in that, it would help me to have some people commenting and doing things on the videos. But if you're busy, you're not going to miss anything either. So all right, we're just coming into this. All my windows adjusted too when I went live, which is so weird. Let me get back to, actually, Chris, why don't you take over for a second? I need to like reset everything. Like my whole computer just went bonkers when I went live this time for some reason. So I'll stop sharing my screen and let you do the intro.
Sure. I don't have anything to share on my screen necessarily, but I can go ahead and kick off today's topic. We want to focus on earnings and earnings season, how to trade over earnings, things to look out for, that sort of thing. So for those of you that are unfamiliar with what is earnings, if you're rather new to the stock market, basically all public companies are required by US law to publish their financials once every quarter, so 4 times a year. And that is SEC law. So all public companies are required to do this. And this basically lets us look into their books and see how these companies are doing. So people that are familiar with fundamental analysis, value investing, all that sort of thing, these people are very concerned with the value of a company. And the value of a company can be theoretically determined by figuring out, well, how much money do they make divided by, how big is their pie? And then how many slices is that pie divided into? And we can figure out what each slice of that pie should be worth. And that gives us a theoretical value for how much the stock, the shares of that company, the slices of the pie should be trading at. But that's a theoretical value. In reality, the actual price that the stock is trading at is going to take into things like the future expectations that the market has on the company. If they're becoming more and more valuable, people are going to want to own them more. And really, at the end of the day, the stock price ultimately comes down to supply and demand. If there's a lot of demand for a stock, then it's going to be going up regardless of what the earnings are doing. If there's more supply than demand for the stock, it's going to be going down regardless of what the earnings are doing. But the reason that earnings are important is because we have these periods 4 times a year where we get to essentially match up what our expectations of the stock have been, our expectations of how the company has been doing over the last 3 months to reality. We get a more or less up-to-date picture of what's really going on in the company. And this can have very dramatic effects on the stock price. So you can go to bed one night and the company announces earnings the next morning, and the stock price can drop or jump dramatically based on what the company said in their earnings report. And basically, again, it comes down to supply and demand, where traders and investors are going to want to know, okay, based on this new information, do I still want to hold this company? Do I want to get out and find something better? Where do I want to park my money, right? Or what are going to be the best vehicles for me to put my money, whether it's for the long term or the short term. So earnings are something as traders and investors that we always have to be on the lookout for and be aware when they're coming up. Most platforms like TradingView, TradeStation, Thinkorswim, they're always going to tell you when earnings are coming up for a company. That way you're aware, you don't get caught unaware of it. So there are specific strategies you can employ to take advantage of big jumps over earnings. A lot of traders also like to just exit any positions that they have that have earnings coming up and just avoid earnings. So we'll talk about all of that in between. But that's kind of our introductory spiel here. So who wants to take over from there?
Yeah, this is going to be largely Chris and Scott. My earnings approach is to stay away. I used to trade some options over earnings, and there's some challenges. In fact, if you're just coming from group coaching, which we did right before going live on YouTube here, we were talking about the challenges of implied volatility and options. And I learned several years ago that that's not my game. And so Chris being the expert in fundamental analysis and Scott being an expert in some of those more institutional moves, I can't wait to hear what you guys have to think about this.
Just to correct the record, I am far from an expert on fundamental analysis, but I've probably just studied it more than you have.
He's taught me everything I know, and that's really not much of an exaggeration.
So I want to show you guys something on a way to take advantage of this so you can see it. As I mentioned, I don't advocate for holding through earnings. If you're an investor, by law, you're holding a position for 1 year or longer, you have 4 quarters, you deal with that. I don't want to play before earnings. If I do, it's not because I'm going to hold overnight with it through the earnings or the next morning, so to speak. I'm going to trade into the earnings announcement and I'm going to exit before the end of the day. If you don't feel comfortable doing that, then let the earnings hit. So this is exactly what we did with JP Morgan. I did this. We recorded this live actually yesterday. I broke it down the pre-market. I gave the expectations of how to kind of this into how to look at it from the open bell. And then I broke it down intraday, and we actually saw the stock go short and then back to the long side. What I told them to do was take, and this is suggestion for everybody. This is going to be JP Morgan. And what I would suggest you do is just take the bar that was the earnings day, which is yesterday, and mark the high and low of that day. When you do that, now go back to your whatever chart you're going to function from. That is yesterday's high and low right here. So if you want to put a little rectangle around it, whatever helps you isolate this information in, do that. Then you come in today's date. What you want to do is you want to treat whatever is above this range as something that you think can lift higher, move higher. If it's inside the box, it's neutral. And if it's below it, it's negative. So it should be going lower. It should be going to find support, the next level of ground it can stand on. Where are the buyers? And if it's above it, where are the sellers going to come in above you? If you will treat this just like we've talked about the Federal Reserve announcement and creating boxes around that, you now treat that day like an opening range, just a defined high and low, and you can play with it. You can see even in the Slack channel, we're talking about this picture posted of this thing keeps hitting the bottom of the range, and you can see it broke down. So that's 126. It's done about, 70 cents per dollar down. You don't have to chase. Let the pros come in, let them battle each other out for a little bit. You stand back and get out of the way, and then let them resolve. Now, what is fascinating about this, my son is one of 30 students at his college that is part of a fund that they had an endowment given, and it continues to grow year after year. And they want to add JP Morgan, and they own JP Morgan from over 20% higher, unfortunately, before he got involved with it. And I just shake my head. It's also a fundamental analysis fund. They do DCF modeling and all this, no technicals. And I'll pull my hair out, you can imagine. So I'm getting to a point with this, which is I walked Mason through, and I didn't have to explain to him. He was very obvious to him. We looked at every earnings date for the past, I think, 7 quarters. You know what the typical reaction was for JP Morgan after earnings the following days, even if it was in a bullish uptrend, was for it to get sold off. I didn't come up with that. He just looked at the chart. He said, Dad, every time they have earnings, it's like right after that, it tends to sell off some before it goes back higher. There's a pattern there. Even if it was a bullish trend, it still took profits. And a bearish trend, so to speak, is still getting sold down. So whatever the logic behind that is, if you know that, then you can bias. You don't have to trade yesterday. Again, let the pros battle out. Then you come in somewhere. We know how much Josh and I like the fibs, right? Well, where's the midpoint of the range yesterday? Okay. See where she's struggling. See how she can't get through that midpoint. See how it keeps hitting the fibs, getting stuck. It's now stuck in a range. Let it break that floor and let it take the elevator down the next level and be done with it. Very simple, not difficult, easy to identify. And you're going to have how many companies report earnings in the next few weeks? I'm talking major companies, not the minor no names. I'm talking the JPs, Apples, and everybody else out there. It's a very simple strategic way to just let things play out and just look at your preceding bias. And if they want to take it higher, they'll take it higher, but you're not trying to chase here. You're just being patient with it. Does that make sense? Or questions, guys, your thoughts, input on this?
I think it's so smart. So just to clarify and reiterate, you draw a box around the day of earnings. If it's above it, it could be seen as supportive. If it's in the middle of it, it's neutral. And if it's below it, it's seen as a I don't say resistance, but it's a downward draft on the price action.
Agreed. It gives you, I can't say it's binary, but it gives stocks only go up, down, or to the right. And this forces you into a disciplined state. And that creates a structure, just like when Josh will sit here and, post, okay, this is our risk box and here's our targets. The same thing here. And you can look at the prevailing trend coming into it. And so now you start to play with that and you keep it super simple. You look at it, you're not chasing, you're framing. And everything I teach is about framing before you trade it. That way you've got peace of mind coming into the trade. We also did the exact same thing this morning from a more active standpoint with Goldman Sachs, because Goldman reported earnings this morning. And this was all pre-framed. In the pre-market, I did an impromptu. Well, I did a coffee and cash bonus this morning, and we framed it. We scoped it as in where we thought it was going to open. We paid attention to the fact that we were going through a 3-day high this morning, or it was in jeopardy. What they do, they gapped it almost a full ATR up. They sold off. Again, you didn't have to chase. I would now mark Goldman for next Monday when this day is done, the high and the low of whatever the range is, and let it work itself out. The same thing with JPM, the same way I would treat when you show your daily chart of the Federal Reserve announcements. It's the same biasing, and it takes out some emotion of just trying to chase price and let price come to you. Does that help?
Yeah, it does. I was just looking at, I hadn't looked at JP Morgan before. I'll show you what I'm looking at.
Please.
Snag the screen. And I promise not to derail us, Chris. I got a little bit of a lecture, y'all, earlier from Chris about how we never actually talk about.
So dramatic.
Gosh. It was lecturous. So this is a weekly chart to clarify the picture here a little bit, but all right, I'll give 10 bonus points to the first person that types in either to chat on Zoom or on Google what that is. Let me pull up my Zoom chat. I've lost it now. Where'd you go? Come on back. All right. Anybody? Okay, Roy's close. I gave you 5 bonus points for that. Somebody knows, and don't underestimate how long I can hold out waiting for somebody to answer. Thank you, Roy. Got it. I'm gonna 10x 100 bonus points to Roy. All I see here is a head and shoulders pattern, and I see these all over the flipping market right now. And here was the testing right there. That was the testing wave, and we're headed down. And I forgot I left my fibs on the chart here. I'm actually curious how you would draw fibs on this part, Scott, and give us some insights about how far back we might pull on JP Morgan. And then I promise we'll get back on topic, Chris. Just indulge me with one fib and go from there.
I like Sorty's comment about the Nerf bat from Chris. Yeah, I want to say some stories. I didn't ignore that. I loved it. I think it's awesome.
That was group coaching. See what you miss if you don't come to group coaching, y'all. It got real.
So what's interesting, we have talked about this, and this is not the right one. This is Goldman, but JP Morgan, it's all the same. They're all the same boat, right? Wrong stock, Scott. Seriously. All right, here we go. So when I look at this currently, just to answer, because I had told my son, because they want to dollar cost average after being down 20%. And I'm just cringing. So where
losers, average losers.
Thank you, because that's exactly what I told
remember
my
that saying.
You don't, and I'm just like Mason, and they have money management discipline on the way up, but not on the way down. And I just like want to scream, like I don't understand it, but more on that later. So we kind of know we are right here in the bigger macro picture, right? We're right at the midpoint of this, and you had a head and shoulders, right? If you just block just this energy right here, which is where the bulk of this topping was, right? You bring that down from the breakdown low. Where are you sitting currently? Right on it. So you've had a geometric move down. You've had one. Now, all metrics, and we touched this last time, and I actually touched this morning in class for a second, because Josh and I contacted this last time just a pinch, and I don't want to get off track, but this really does fit with earnings. Here, hang on with me.
Lecture Scott next time. I feel like it's his fault.
We talked about bullishness and bearishness, right? And my interpretation versus Josh's or most people's. And one thing I want to address with this as we're going into earnings, so this fits into what we're talking about right here. JPM, according to Wall Street, not according to my personal opinion, the way they used to define a bull or bear condition for a stock, this is actually in a bear market. Not my opinion. There's definitive ways they get to this. A lot of us were trained to use what? A 50 and 200-day moving average crossover. So you get the golden cross or the death cross, right? Well, you can get a whole bunch of those. Then you get into, is it 20% down? Do you know that's not the actual definition of a bear market? But yet the media will tell you that it is, but it wasn't. It was a soundbite that somebody ran with. It's not that a lot of times they're not down 20%, but I've seen stocks down 20% that didn't stay in a bear market. There are ways to get to this. We know with Morgan, Goldman, and JPM, they're all in bear markets the way Wall Street used to classify them, as a bear market. Okay, so they're in that condition. And I've got a fund manager who's long Goldman, and I'm just screaming. So whether it's JPM, we'll just use this one as he's asking. You can see where potential support is, but where could it really come into? Because I even told my son, if you guys, they can't make decisions over the summer because they're not in classes because the semesters are out. I said, why can't y'all ladder in? If you really want to own it and you know it's in a bear trend, even though you guys don't know that with your modeling, why not set brackets at 113-ish and change? Why not take the next round of tranche where you're going to buy and ladder down? So support be where? Right on a fib number. Where's the next one? Well, you can look left and see it because price has what? Memory. So take the high and low of that range. Where is that? It's around a fib on top of that. Set another order to buy there if they want to. Now realize, guys, they hold for over a year. So I understand their situation. My personal complaint is, just to compare this as we're going to earnings season, you have stocks like this that continue to move higher, and yet they want to reduce exposure, but yet they're in bull markets, but you're trying to buy stocks in a bear market. And so as earnings are coming out, and yet this morning with Goldman and JPM, as you reported earnings, the stocks are not gapping up 20, 30%. They're not changing gears. They're actually they're still selling the gap. They're still selling. They're selling the premium, so to speak. They're selling off, I should say premium, but they're selling the gaps. They're not buying the weakness. They're selling strength. They're selling the rip. They're not really buying the dip. And that's a concern. And as Josh has pointed out, whether it's Goldman, JPM, or Morgan, they all have the same type looking head and shoulders top out formation. So let them come in and let them find a level. Let them prove support. Meanwhile, let's focus on stocks that might be moving up into earnings, like a Valero, like a Mosaic, materials, commodities, energy names, the 11 stocks that make up the oil holders. Does that make sense? Do y'all see where I'm coming from? Does that, Chris, you want to comment?
Just, I mean, not really earnings related, but just, yeah, in general, buy companies that are going up, right? Like you don't have to take the difficult trades, right? Like why are we trying to buy a stock that's in a downtrend here or bear market, however you want to define it? Like the stock's going down. Why are you trying to buy it when, again, like there's 3,000 other companies in the market, right? Like you don't have to make it hard on yourself. And that's why I like to look at things from a sector standpoint too. I do this every month when I do the market briefing report, where I literally just go through each of the, the XLKs, XLYs, all of those, the spider sectors, and just look at who's going up and who's going down and compare it to the S&P 500, like who's outperforming and who's underperforming. So if you're looking to buy stocks, just stick with the sectors that are going up. Like don't make it hard on yourself here, right?
Agreed.
Very smart. I feel like there should be a barge analogy here, but I'll refrain.
Don't refrain. Throw that in there.
Go ahead, throw it in there. I want to hear this.
Probably aren't familiar with the barge analogy.
Me into it. Yeah, let's do the barge analogy. All right, because everybody loves to see this drawn out. So
we got to get you some proper graphics for this, so you don't have to hand draw it like a Neanderthal every time.
Some of that new software that you and I are playing with for these live broadcasts, we could just have it in there as like a standard graphic pack. So it's like time for the barge analogy, but it's so good. So, the way that I like to think about this and the way that you could take action on this information that you guys are receiving is, imagine, if you will, that that the market is a river. So if you're in the US, it's the Mississippi River, it could be the Nile River, it could be the Amazon River, but it's a river. It's a substantial river that's flowing in a particular direction. And this is a navigable river. So on the river, at any given point in time, there are barges. This one has a very vertical front. It's like a plow, like a barge plow. So that's Chris loves this. He's like, I think he's taken a screenshot of this and printed it and put it up on his wall. Anyway, so you've got your barge that's moving through the water, and it's also going a particular analogy here. So the spider sectors is what I often look at, as Chris mentioned a moment ago. So what direction is technology going? What direction are the financials going? And then on this barge, because it's a barge of activity, there's also a little forklift. So here's our friend driving the forklift. There's this little forks. And at any given time, the forklift could be going one direction or another. So let's say he's actually heading this way. And the forklift in our analogy represents the security. And so the three things in the same direction. So if the market's bullish, then go find some sectors that are bullish and go find some securities within that sector that are also bullish, because they tend to have a magnetic effect on each other where they're pulling their counterparts, and it always pulls down. So the market, if you get a very strong day in the market bullish, I don't care how bearish the sector is, there's a good chance it's going to get pulled along with the bullishness of the market and go down a level. If you've got a sector that just has an explosive day, we find out semiconductors are on sale in Taiwan and all of the technology stocks shoot up, then it's going to have the effect of pulling Apple and Amazon and all these other technology sectors up with it. So that's the analogy that we're talking about. It has nothing to do with earnings. So let's get back on track here. That's my very abrupt segue back to earnings. But any questions on that before I go? We've got so many on YouTube, which is great to see. We've got 9 watching currently. I see Raymond. I see Richard in there.
Richard's driving the forklift.
Oh my gosh, that is so true. We should take pictures of students and put them on the forklift. Like that's a badge of honor if you get to be the forklift driver for the month. Tom said, like Amazon, the market's filled with piranha. I don't know if I agree with that 100%. That may not be the right psychology pattern to have, but shoot, there was something else I was going to say to that, and I don't remember it.
I'd agree with that. I think they're called professional traders, and they're there to eat retail traders for breakfast.
Yeah, they eat the uneducated traders for breakfast. That's for sure.
Yeah.
But anyway, yes, kind of just concluding JP Morgan, I see Head and Shoulders everywhere. And, I draw my fibs a little bit differently than Scott does. This was actually drawn off the weekly. There's a few different ways that we could look at this, but, we're right around halfway into that box, regardless of how you draw it. If you go from the bottom wick to the top wick, which is fine. I just judge you a little bit, my spirit. There's a lot of other rules are being followed here, not the least of which is the 50% line is going right through this major wave, et cetera, et cetera. But, where could we go? We could come on down here to the bottom. We could also start basing, and we could also bounce and go up. So not a great entry opportunity, in my opinion, on JP Morgan, but it's interesting just to see this showing up all around the market in many different places.
I like that analysis of where it could go. That's how I feel every time I'm doing the market updates. Well, It could go down, but it could also go up. Maybe it just goes sideways. But it pretty much covered all the bases there.
But think about when you do your analysis, guys, and this is for everybody. When you're looking at that chart, what are the probabilities that it's going to go significantly higher against that slope? And what is the prevailing trend? And the object in motion tends to stay what? In motion. So even if it tries to base here, it's the waterfall effect, and more rain's coming down, and the waterfall is getting heavier and heavier and heavier. So you've got to work that off or move away from the bulk of that water coming down. If you've ever been surfing, the heaviness of that wave, right? When it crests and comes down, they're going to have to work that slope off. I talk a lot about slope and traction, and I demonstrated literally almost every coffee and cash now. Why? Because you got to work that slope off. The sad thing is a lot of traders will come and look at a chart like that, and they'll think, oh, it's going to just go mystically up like Veru, VERU lately has been on steroids, right? It's not the reality. So that's why the first place you start with basic trend is just go look at the daily chart. Is it making higher lows and higher highs? Is it making lower highs and lower lows? And that one's clearly making lower highs and lower lows. So if you are in the bullish mentality, so to speak, that this thing can just go a whole lot higher, realize what you're working against. And so why not go find a Valero, an energy name or commodity name, something that shows you the reverse of that. And then if you only like to play long side, and look for something that has energy behind it and is coming out of a base and is trying to move higher. And then we can look left at future resistance. This is a very core issue I see all too often with trying to predict. It depends on who you are as well. Do you want momentum to help carry your trade higher, or do you want to just kind of trade in a range? And what strategy are you playing? If you're an options trader versus a fundamental trader versus an investor versus an active trader. So we're trying to answer this for a different variety of people, but it doesn't change the baseline idea. And Josh has nailed it. There are a lot of symbols showing up that have the Head and Shoulders type feel lately and breaking down from them. So if they are breaking down in the future, where are you going to find resistance? So you play a short squeeze. Where's resistance? Go look left where it broke down from, and you'll see your target. Does that help?
Yeah. Hey, one of the things, and I don't know why it's not working on my chart. I normally have the earnings showing up, so it's concerning to me that they're not. I double checked and they're selected here, so I'm not sure why it's malfunctioning. Well, not even that's malfunctioning. But I'm curious, those of you, Scott, Chris, that are more the fundamental, you're looking at more of that economic data. Where do you get your earnings information? Where do you get alerts if there's a stock coming up for earnings? Like, how do you process all of that?
So the best site for data, in my opinion, is Zacks.com. If you go to a lot of other sites, they'll say in their tiny print that we get our data from Zacks. So I'm always just like, just go straight to the source anyways. So Zacks.com is fantastic. You can get a monthly membership there for $20 a month. It is easy peasy. By far one of the best data sources for that kind of information. Their scanner is also fantastic if you are scanning for fundamental stuff, right? If you're looking for earnings growth over time, that sort of thing, PE ratios, PEG ratios, they're fantastic because they also have the earnings estimates, so future projections. And that's what matters. If you're doing fundamental stuff, it doesn't matter what a company did last quarter or last year or 5 years ago, right? It matters what the projections are in the future, because the market is not trading based off what they did in the past. The market's trading based off of what they're expected to do in the future, right? What are our expectations for this company? Other than that, though, like if you have a position in, let's say, Thinkorswim, for example, TradeStation probably does this too, but I don't use TradeStation desktop. So Scott, you'll have to confirm. Like if I have a position in a stock and earnings are coming up in a week or so, I'll get an alert. And there's always a little symbol next to the ticker as well. If earnings are coming up, I think it's sometime in like the next 4 weeks or something. And if earnings are coming up in, I think it's a week or two, it's around that kind of like 10-day-ish range, they'll send me a message. Like I'll get an alert that says, hey, just so you know, the stock has earnings coming up. So just so you know, like if you want to hold it, then just be aware that's coming up. And if you want to get out, that's your time. So TradeStation probably does the same thing, I would imagine.
It's smart to know, guys, when you're in front of an earning situation, especially if you don't tend to hold through it, as Chris is making it really clear. You want to know that. I've seen good friends of mine, people I've worked with, they had no intention of holding through earnings and they missed an alert. And this has been years ago when you couldn't always know. And they're just like, their heart just sinks. It's like, please don't kill me overnight, like the account, because they didn't mean to be in the position and they're left in it. And they're like, there's nothing they can do. And sometimes it works, but just heads up, just like when you go into, at least with TradeStation, options expiration, it's like, ooh, you have a position. Do you realize if you don't do this, we're going to do this for you kind of stuff. Like we're going to liquidate for you if you're in a position. So yeah, it adds up.
Yeah, like Josh, how you had earnings turned off on your, I never turn off earnings on my chart because I always just want to be aware. Like I want to have that little visual reminder that tells me it's coming up soon. And I know sometimes it makes the chart a little messy, especially on weekly charts. But yeah, I never turn those off because like Scott was saying, you absolutely don't want to wake up one morning and realize, oh shoot, the stock had earnings, like that could be devastating. So definitely always be aware when earnings are coming up.
So I'm going to show you guys something while we're talking about that. Just indulge me 1 second if you don't mind on this. And y'all keep talking, but I'm gonna clean the chart up just for a second. I don't need all this other stuff.
What would you say, Chris, to somebody who says they like to, there's so many services out there that give you the preview of what the analysts are expected to say, and like, kind of all this earnings whisperer, like the undercurrent about what's going on, and to try to like to play that trade prior to the earnings announcement. What are your thoughts on that? And maybe pair with that, like what your experience is watching a stock move based on the quality of its earnings report. Is there any corollary?
There's kind of two different ways, I would say. I mean, I'm sure there's more than that, but just with what I'm experienced with, there's a couple of different ways to play stocks into earnings. And the first would be literally like getting out before the earnings happen before the earnings are happening. And so that can be great. That's something a lot of people like to do with options, right? When you're an options buyer, because implied volatility tends to go up into earnings. So people will buy options, a couple weeks or a month before earnings, and then hold the option up until, like the night before earnings or the day before, something like that, when implied volatility is at its highest, and then sell the contract and get out before the earnings happen. So they miss the IV crush. The other way that you could do it is literally try to figure out what the earnings are going to be. And that is doable, but it takes way more work than most people are willing to put in. Like it takes a lot of fundamental research. Like you have to really understand the business model, understand what's been going on with the company, follow the news flow, and like just a lot of stuff that most people don't want to do. They just want to look at the charts, and that's fine. And I think that there's nothing wrong with that. And usually like the juice isn't going to be worth the squeeze unless you get a very, very unusual earnings move. But most of the time, like the market maker has an expected move for how much the stock is expected to move over earnings. If you don't move more than that, you're not going to make money, at least with options, over that earnings anyways, even if it does gap. If it gaps within the expected range, your implied volatility is dropping and the market was already priced, like the options were already priced for that move anyways. So if you don't get a greater than expected move, you're not going to make money on the move anyways, even if it was a gap. So I would say like the earnings whisper number, the analyst expectation, like everyone knows those numbers, right? That's already priced in, especially to the options. If you're trading stock, that's kind of a different story, but just talking about it mainly from an options perspective, which I wouldn't personally want to trade, like if I was going to trade through the earnings announcement, I would want to hold options, which might sound strange because you do have the implied volatility crush, but you also have the other side of, you have the built-in stop loss, right? Where I can't lose more than a certain amount if I'm dead wrong. So if I have strong feelings, not feelings, but I've done my research on a stock and I have a strong expectation that, oh, I think actually based on such and such and such and such, I think they're probably more likely to beat the earnings expectations. Well, then I can play that, but I'm going to play it a certain side. I'm either going to play the long side or the short side. I'm not going to like buy a straddle. Not that those never make money, but seems pretty hard to make money with that. So I would rather like buy call options and basically just expect the delta to overtake the loss in Vega. That's essentially what I'm betting on, right? I'm betting that the stock moves more than the implied volatility drops. And if I'm right, you can make a killing over earnings with that. And if you're wrong, you have the cost of the option is your stop loss, right? So you can be dead wrong and still only lose 1R or whatever you put into the trade. So I think that's probably not a trade that most people want to do. And it's not something I would really encourage people to do, but it is doable. The other thing that I think is probably more up most people's alley is doing the Alfonso thing, where you wait for the gap to happen and then you trade the gap, right? So you basically play it once earnings are announced and then it starts doing its move. You play it that day into the next couple of days, and it's a day trade or a short-term swing trade. And I think that's probably a lot more. I think playing into earnings and then getting out right before earnings, and then also playing once the earnings has happened and trading, day trade or a swing trade based on the gap and all of that, that's probably a lot more likely to be profitable for people. Let's put it that way. But I think you definitely need a strategy for going into it, right? Just like blindly trading, oh, there was a gap today, let's just go try to trade it. Like you need the earnings explosion kind of strategy, like something that you're, have an actual defined strategy based on earnings that you do for that.
Agreed.
Perfect.
It's framing, it's pre-framing something before you do something with it. Just like like I've seen Gordon Ramsay and whatever the Hell's Kitchen, all that, or the competitions, and they go get their ingredients. It's all set there and then they pour it in or whatever. I'm not a chef and I'm never going to be one, but it's the same idea. You need a catalyst. You need some reason for the institutions to come in and move the stock. You need something or to dislocate the stock so you can profit. Remember, if 90% of the trading going on is a mean reversion system, and that's pretty much what the numbers show to be, then you want to start to dislocate. And if it dislocates, that's like taking a rubber band and stretch it out and then let it come back together. So when it stretches out, you want to come to the fringe edge and pull it back in. That was the whole idea behind -3 deviation trades. Let it pull back in. Earnings are a catalyst. Well, guess what? We just started earnings season, guys. So if you're an active player, or you are looking for a more longer term push swing, as Chris is talking about here with Alfonso, then those opportunities are going to present. That's what makes earnings season so exciting, especially for the major names for 3.5, 4 weeks coming up. Okay, so here's a chart of the EPS postings on Goldman Sachs, and this is available in TradeStation. If you just want to know what it looks like, it says EPS postings. Okay, and I've taken the high and low of that EPS, that earnings announcement, I've marked it. Now, I want you to watch the chart from the left to right for a second. So it posted, it sold off, it recovers, okay? Runs up next earnings season, sells off, recovers. Next earning, sells off, recovers. Where does it find support? Where does it go up to? Back to resistance. Next earnings. This time it's reverse. It goes up, then it fails, retests the low, goes back to the prior earnings support levels. See this all the times it's been here? See the resistance? See support? Look left. See resistance? Look left. Do you understand they live quarter to quarter? I'm showing you how to map major key support and resistance with what you're learning today. It's very simple. And that way, when your indicators are confirming that, hey, this seems like resistance on whatever date this is, now you can start to look at it and there's a little head and shoulders or whatever that is. And where are you going back down to? The next level of support, which was where? Probably around earnings. Yes, there's intervals of support resistance here, guys. other areas we can look left, but you're going to have this 4 times a year. Bring the prior year or two across your screen if it's within reason. In other words, if the earnings was at 500, back at $500 in price, and we're now at 300, you're not close to it. It's not much value. But if you're going up and down, well, you want to go back and look at prior earnings and just bring you a box across. Keep it super clean. 4 times a year, it won't take you long. Whether you invest, day trade, or swing trade, guys, these are going to create great levels to work against. It also gives you upside and downside targets. If you want to take it one more step beyond that, take your box, do your fib retracement, and just go from, I don't know, from the low of the box to the high of this box. Where's the midpoint? You'll find support in there, little fib box inside of that. Okay, or you can go from the middle of the range to right here if you prefer that. But just to give you the midpoint between that will give you some shorter term targets. Very powerful concept, just like I talked about earlier, just like we do at the Federal Reserve announcements. And once you do this enough stocks, you're like, wow, this actually does, it can add value to your trade setups, your framing, and your opportunities. Does that help?
Can you find projections with this too? Like, so this is a good example of a stock that's rolled over, but if this was a trending stock and wasn't looking back, can you do projections off from these levels to find if it was making new all-time highs?
Yeah, I mean, you could take your fib. I would just do it like I would with like a fib projection tool and just go from something like this, whatever. Scott, what are you doing? Fib, price extensions, and just take something. Either take this, section 3 here, right? Something like this, and go to that pivot level there. You can see your levels come into play. I'm just using that date and just focusing on that to that to that, and it's doing a decent job of catching it. You might have to play with it a few times, but once you realize these things all kind of correspond together, you're eliminating the extreme high and extreme low. If you notice, I'm not focused on the low here, and then, well, clearly I'm pulling this high, but I'm going back to that level. But I'm getting solid levels where I'm not trying to get penny perfect at the top. I'm just getting some nice framework to work with. Okay. Does that help?
Do you have an expansion? Yeah. Do you have an expansion, Fibonacci expansion tool on there? So like, Interesting. I have a hypothesis. I'm going to go play with this, that if you were to just build expansions off from, like, say you measured that bottom box up to the second box up from the bottom, and then projected, the same pattern up from there, that you would find that the top box and the second to top box all fall within Fibonacci ranges, which is very interesting. I'm going to go play with that on my own. Teach it like it was my own. Take more of Scott's content and claim it as my own.
I love Josh. He makes me happy. Does this help everybody? Like, I mean,
at least I tell you.
Oh, I know. Your brother. I'm not worried about it.
I'm gonna get T-shirts made that say PHM. It says it, like the whole thing's trademarked. I own PHM.com. Like, it's a thing now. Funny story about that. I rubbed shoulders with a lot of business owners and entrepreneurs, and this guy was telling me he was a veterinarian, and he was like, I have this idea for this like organic special dog food. And he's like, I think I'm going to call it Wolfgang Pup, P-U-P, Wolfgang Pup. And I'm like, dude, that's genius. Possibly an infringement on trademark, but that's genius. And so he's telling me all about this. He's got the whole thing laid out. And I just pulled up my my domain tool, and I type in the URL, and it's for sale. Like Wolfgang Pup, he hasn't bought the domain yet, and he's here telling me all this stuff. So literally right in front of him, I was like, purchase the domain. I later gave it to him, but it was like $15 mistake. Like, he's telling me all about Wolfgang Pup, and he doesn't even own wolfgangpup.com. Like,
sell it to you for $3,000.
Yeah, exactly. I bought it for $15 on GoDaddy, and I'm like, the price just 10x. Oh, there you go. True story. Just be careful what you share with me, Scott.
There's never a dull.
This has been very helpful, though. I mean, I like the way that you frame things, right? Like, where no one else has ever taught me to, draw boxes around the range for the day on earnings. That's cool. And then projecting it outwards.
Well,
I like
right. So think about this, Chris, or for everybody. And you can see how where this recovered, and then all of a sudden this thing extends up, right? Well, you're going through this earning box, but look where it tested. Typical breakout pulls back the support. Where was that? Okay. Again, you can see how it's just stepping and they're building support inside of there. And here's where I'm going with this though. Once you do this, if you have a physical business, if you own a physical business like a bookstore, a retail shop, right? You have to take inventory of all your goods and services, a snapshot, right? Regis does it for like Walmart and the big box retailers, right? Take a snapshot. So 4 times a year, we get a snapshot of what's going on in the company. And if we live quarter to quarter in America, especially for those of you outside the US, it may not be this way in your countries, but in the US, everything is for the next 90 days. Push, push, push. What are we going to do in the next 90 days? We got 9 days. Let's make this happen. If they live quarter to quarter, and that's, what is it? Earnings are the mother's milk or the green shoots, they used to say during the 0709 collapse. If we know earnings matter, and they do, then why would we not want to know those dates? And then look at support resistance around it. You can see it. I didn't do a great job marking this probably, but you can see where it's getting down to, and it sold off really hard. Well, if you know that's an earnings date, you sold off really hard, and this is like 3 waves basically down, that's probably a good place to consider taking an opportunity from. And if you look, this is Apple. This is a major player, right? This is not small potatoes. Without doing any other technical analysis, it seems like it's holding up pretty well lately. Well, I don't know what's going to happen when they report earnings, but I can see we're back inside the earnings box if I enlarge this for a second. If this is my earnings box, and I didn't do a perfect job because I'm doing this really quick, can you see where you're getting your chances to play with this? If you're an active day trader, a shorter term swing trader, you'll find setups against these levels. Look at the support, look at the resistance you can then pop and play off of. And that on a good ATR stock, that's opportunity knocking on the door. And all you're using is where the institutions are marking, because that's the big boys marking that bar. They're telegraphing to you support resistance, okay, from that level, and you can play with it. We can do more with this, but I just want to give you a feel. And one more, I won't mark it all up.
I have to say, when you just said that's the big boys marking the bar, I had a distinct picture of a dog peeing on a fire hydrant. If you're looking for an analogy, just... Hey, I'm going to give a shout out to Josiah in here too. He's on YouTube. That's my middle son. So
dog peeing on hydrant is going on the YouTube thumbnail. So thank you for
that. What would you do without me, Scott?
I would not laugh this much. I know that. I lose my thought sometimes when we talk.
Did anybody else not have that same thought? Like,
Chris, did you?
I can't honestly say I did until Josh said it, but.
Oh man,
do you welcome. Have a picture of fire hydrant, a dog for me, like the little spotted?
Oh yeah, it's happening. I think Chris is already working on it probably.
This is so not right. All right, I'm gonna throw you one more bone here, guys. You ready?
You didn't just say it. Oh, sorry. That was too good.
See where we're hitting? You see it? Do you see it? All I'm connecting is the earnings dates, guys.
That's where all those lines come from on your chart.
Now, you're now stuck between earnings dates based off of swings. Look at the connectors. By the way, while we're here, do a little cross right there, right between there. See the support? Okay. You don't know. I get you don't know this part of it, but you do now. So you know you're stuck inside of that V. If you take the idea of a circle, and this may be obvious to everybody, if it's not, just indulge me. I know we're getting over on time probably, but how many points in a circle? It's not true.
360.
Exactly. So there's 360 potential angles you could have from that, right? 360 lines if you were to take from the center and draw out. if you can imagine now that this right here is nothing more than that section of that circle coming out in time. And right now, price is controlled in there until proven otherwise. Was this NVIDIA? I don't care what stock is. I don't focus so much on the symbols, just making sure it's something to look at. All I'm doing to generate this is just take the earnings day and draw trend lines through it. Now, again, we could mark the high of the bar to the high of the bar, the low, and all that. I'm trying to get you guys to see. But remember what I taught you about in the past? You see the gap? See the gap? See the gap? You'll see it over and over and over again. You'll find support in the future right here off of those 2 points. You'll see it over and over and over again. And now look in the future, and where are you finding support? I'm not random with a line. I just connected these 2 points. I've hit it here. I've hit it here. I've hit it here. And NVIDIA probably, I don't know. I think it's in May. They have earnings. I don't remember. I haven't checked. It's a simple way to find real obvious trend lines that are generated by the big boys, not by me, not by you, because we know they're the ones that set the price on earnings, not us. The company does what they do. Wall Street reacts to it. And I'm giving you, anyway, does this help? Does it make sense?
This might be a little anal, but I'm curious why so the very topmost earnings one, right? The yellow dot was like right in the middle of that bar. And if you go to the very far left one, the dot's near the top of that bar. Where are those points coming from?
Those, it's just the way TradeStation plots it. I don't know what their logic is on the displacement of that, Chris. I don't know.
I'm just wondering, if I was going to go recreate this in TradingView or something, right? Like, I'm not sure where I would pick in the bar to draw from.
So here's what I tell everybody: if you want to try to represent this again in a way that you can do it, take the middle of the bar and just connect the middle of the bar, the high, the low. That's what I would do. And if you want to get a little more like me, if you're like me, then do this. Just take the high and the low of the bar, and you can create.
Interesting to apply some VWAP there as well.
See your channel? Now, notice, and granted, you're all the way down to here, but you can get a sense of where you are on this side of that versus this side of it. And it just helps you see if things are starting to shift over time. Again, it's just something to get you in the back of your head to focus on kind of where things are. And I know you have a whole quarter delay, but again, I'm using the past highs, lows. Now I'm using the past earning dates to help forecast information in the future to look for support. And if you notice, now am I hitting this trend line here currently? What else is happening right here? I'm also coming back to the high of that earnings day, and I'm intersecting that. There's nothing wrong with that because they're look, if we can place value around the high and low of this as support resistance, what I've demonstrated, what you need to understand is, see the retracement and the failure. These trend lines are just as valid, but because it's not a horizontal and a specific high and low, people are like, oh, I don't understand. No, they're using this. They're secretive about how they want to forecast information out there. And this is, you can see clearly you're hitting long-term support on 2 different angles right here that breaks down, and then we'll move to the next level. But I could go back in time and probably find the earnings date and just see what it looks like, which might be just connecting these 2. So pretend that NVIDIA goes into trouble and it doesn't perform really well, right? Could I not use this on another failure for this to be a level of support down the road if it were to collapse down? In theory, even though I think this is too sharp, but let's just pretend earnings came out and it got slammed. I would look for there. Why? Because it's based off of 2 prior earnings dates. That's just a trend line. That's without marking the boxes across the screen.
And you always keep them consecutive, or do you ever do non-consecutive dates?
I would, if I get a stock that was really running like on steroids, still going, I would have no problem skipping one right there to get that angle. I'll have no problem because basically what I'm doing is creating a cone. Again, everything is still in a giant grid, a giant circle, and it gets more advanced in the conversation, but I would have no objection to doing that for somebody at all. So I don't mind skipping one. That's the same, this is not this, but the same logic of when I've walked people through how to skip a pivot to create that S&P monthly channel, which is not earnings based, but the same logic. So I don't have a problem not being consecutive is what I'm trying to drive home for everybody. So if that helps. Does this valuable? Does this help everybody? Does it give you a little more insight into earnings and areas around it?
Helps me,
I love it.
For sure.
I love it. Somebody was asking about Deep Sky. Let me recapture the screen here and talk about that.
While you're pulling that up, I will say though, like, this is where I want to hire a programmer to, like, project those earning boxes across for me, because drawing those manually on like every stock I'm analyzing would take so long.
Hey, I'm just saying, Caden's finished with his internship in May, so we start.
What's his hourly rate?
Well, I get a discount. So if I was looking at NVIDIA and analyzing this just as a technical perspective, right about in here, Scott, price has memory. And I think there's definitely an argument to be made that we're testing a support zone here. Whether that holds or not, I don't know. Flipping over to Deep Sky definitely is of the opinion that we're going to hold. So it's looking at this thing saying, all right, last several times that we've come down to 210 or so, we've headed on back up. Now, the thing I will point out about Deep Sky is currently it's got a sky score of 327, and I don't use anything that is less than 600, and I prefer it to be over 650. So if we take a look at this in real time here, Boston Properties 697. Let's take a look at how it's doing. Forecasted bullish, trading bullish today, 125.08, and that's exactly where we want to see. It's right in the middle. Taking a look at Host Hotel and Resorts 603, so right on the threshold. And by the way, if y'all been watching Deep Sky, we've had several days where they've been in the 700s or higher. But also, again, forecasted bearish and trading bearish, actually with a shooting star currently, with 2 more hours of trading left in the day. So that's both the overview on NVIDIA and Deep Sky as well. So you've got one of the benefits that we built into Deep Sky is we wanted to always bring to the top of the, as they say in the industry, above the fold. Bring to your attention stocks that were performing well with the artificial intelligence. And so the Sky Score is an algorithm in its own right that takes into account how accurate the AI has been, how accurate the technical analysis has been. So if we were to dig in here, what is this? Boston Properties. So we're looking at simple moving averages are trending bullish. So, the algorithm takes a look at that and says, okay, the averages have been bullish. How bullish has the stock been? Because if it's starting to roll over, then it's not going to be very bullish, even though it takes the simple moving averages several weeks to catch up. So it takes a look at that. It takes a look at the historical accuracy, the AI historical accuracy of the technical analysis, and then the relationship of the technical analysis to the artificial intelligence. So if the technical analysis is predominantly bullish and the AI is forecasting bullish, then that will contribute to a better Sky Score. So that was probably more than you asked for, Tom. I have to also tell you, Tom, I've seen your name pop up a couple of times, and I keep thinking it's Tom Holland, which is Spider-Man. So you're basically famous, in my opinion, and I'm sure you are famous in real life.
Josh, I think you mentioned this at the beginning and I just missed it. What are your thoughts on Deep Sky in relation to earnings? Would you not trust it over earnings?
Well, that's what I was going to say. And then I realized that NVIDIA earnings were out a little bit. So, by the way, my things came back. That was really weird where they disappeared to. Here's artificial intelligence in a nutshell. It's amazing at looking at historical information and finding the patterns. And it will find patterns that you've never dreamed of. I mean, billions and billions of calculations and data points, and it's finding all these patterns. What it's not great at is surprises. And so sometimes earnings can be a surprise, or Russia invades Ukraine. That was a surprise. Nobody saw that coming. And to some extent, even as humans, like, we kind of saw the events leading up to it, but nobody was like putting that information into the artificial intelligence. So, those kind of events you can see, like, the earnings date's coming up, the geopolitical climate is changing. So I would definitely emphatically not try to use AI to forecast the direction of an earnings gap unless it was an AI that only was looking at earnings gap information. But Deep Sky is not programmed to work that way. It's looking at the everyday price moves, not just, all of the factors that go into an earnings move.
So
Great
one day
question.
a quarter, you just don't worry about it, and the rest of the time it's fine.
Yeah, it'll take. So if it's a surprising gap, which I don't see any of them on NVIDIA, they're all pretty normal. But if it's a big giant move, it'll take 2 or 3 days for the AI to catch up and figure out what's going on. If you've ever come to the webinar where we teach how AI works and how it's actually analyzing, there's a slide in there that shows, when there's a surprising event that happens, the artificial intelligence, because it's a computer, it has to give a calculation. But if it's confused by the data, it's like it goes bonkers and it's communicating to the human side of the world, like, I have no idea what's happening. And it'll just give you some wacky things for a couple days until it's like, oh, this is one of those earnings gaps. I see what's going on. And somebody was asking on YouTube how much Deep Sky is. It's actually not $100 a month. It's $200 a month. And I would encourage you, right now we're in the middle of our all access enrollment. We do it twice a year. It's included with all access, which is $264. So for 64 more bucks beyond Deep Sky, you can get access to Deep Sky and everything else we have to offer, including options training that's coming up with Chris Burgess here very, very soon. So if you're interested in that, info@tradesmartu.com, or we could probably put a link in the description, although the enrollment for all access is closing very, very soon. So that won't be relevant much past today. That makes sense. How do I say your name? Anez? I hope I said that right. David said, you're looking for earnings posting on DIA and ETF. Oh, is that my problem? Yeah, so there's no earnings on it. Yeah. How do you remember that, Dave? You probably saw it and you knew what I was doing, and you're like, yeah, good call. Thank you. There's no earnings on an index ETF. All right, guys. Wow. I tell you, Scott, all I see is head and shoulders patterns everywhere. It's like that movie. I see dead people. Like,
yep.
What a great time to be learning chart patterns, foundations of trading level 2. Good time. All right. Info@tradesmartu.com. Yes. I think we can wrap it up here unless you guys have some more you want to share on earnings, but we're coming up on an hour, just past an hour, actually. Great show. I mean, we talked about dogs peeing on fire hydrants and drawing ranges around earnings dates. I don't know how you get a broader variety than that.
Well, one of those pieces of information was probably a little more useful. I did mention too, we had been talking about the show earlier before we started doing the show. And I had mentioned maybe pulling up a scanner, an Alfonso style scanner is what I call it, looking for earnings gaps. So if we have a second, I could just walk people through that on Thinkorswim. It's nothing crazy, but I think it's good just to give people like some actionable things that they can take away from the show and use today. So why not?
Yep. Do it.
All right, give me just a second here. So if you don't know what I'm talking about, that's all right. There's a teacher at Tradesmart U, Alfonso, fantastic guy, great trader. And one of the things he focuses on is finding these stocks that have just gapped due to earnings. And then he has different strategies that he uses to play that post-earnings gap. So the scanner is nothing special. We're basically just looking for those post-earnings gaps. And so the way that this is set up, one, making sure we have a minimum of volume. This is something we were talking about in group coaching is making sure that, as a minimum requirement, there has to be enough shares for you to be able to get in and out of this stock, right? So you can change this to whatever you want. I like to have a minimum of 1 million shares traded in volume, and on earnings day, it's going to have higher than average volume, right? So I think it should be pretty easy to hit that. The next requirement is, this is a custom code. So if you need to add a custom code, you can just add a study. So you come to add filter study, and then you click the little pencil here to edit it. But basically you want to come over to ThinkScript and you just want has earnings anytime within 2 bars here. Am I looking at the right one? I should be. Yeah. Okay. So this should be looking back. Basically, we want 2 bars because it's either a stock that has earnings today or had earnings yesterday, because they could have had earnings after market yesterday, or they could have had earnings before market today. So that's why we need 2 bars. And then the most important one here is just the study. So this is included in Thinkorswim. There is a gap up here, and this is under price performance. There's gaps up and gaps down. So you can have 2 different scanners, one for looking for up gaps, one for looking at down gaps. And then basically what I'm looking at for an up gap is that today's low is higher than yesterday's high, right? That's how we get a gap in between there. And then how high of a gap, you can specify however much you want. I just put 1% as kind of a base here. And we've got 2 stocks in here, so nothing crazy. But if we just take a look at these 2 stocks, and let me go ahead and have a chart that looks less crazy here. So
we've got put that code in the TSU Discord with the rest of our fancy codes.
Yeah, sure. So here you can see, as an example, USB here, right? We've got a gap up here. So they had earnings. This was earnings before market. Cool. So they had earnings, it gapped up, and then this is where you could dive in and look for Alfonso plays. So I believe Alfonso looks at like the Business Investors Daily list or something like that. You can also just run a scanner, and that will pull up stocks for you that have earnings and are gapping due to earnings. So we could change this to like a gap down, for example, if we wanted to, and then we'd want to switch around, make sure that the high of the gap was below the previous low. And that's basically how you would run a scanner for stocks that are gapping over earnings.
Awesome. I need to use more Thinkorswim. It's such a powerful platform, and it speaks to the inner geek within me. Awesome. Hey, thanks for coming, guys. If you have thoughts or desires of things that you'd like to see in the weekly YouTube show, let us know. We are getting ready to launch some software here that's going to make them more interactive and a little higher production quality, just more fun, trying to take steps that are in a more engaging manner. And so some of that's just providing a higher quality experience for everybody. So thanks for coming, Scott. Thanks for joining us. I always have a blast when you're here, and I was excited to hear that you were going to be here today.
Appreciate you.
I said here 3 times in one sentence. That's a gift. I believe next week it's just me and Scott, right? You're out of town, Chris?
Yeah, I'm MIA next week. I'll be in Texas for my sister's graduation, getting her master's degree. Very proud of her. So nice. Yeah, you guys are flying. Well, I guess it's not solo if there's 2 of you, but you're flying without me.
Scott and I'll be performing a duet, and with the latency of the internet, it's going to be very interesting. But I'll send you the background track later today, Scott, and we can start working on that. Anyway,
don't want to miss that.
Yeah, Chris is going to catch the recording.
Chris is going to delete it from YouTube.
He'll change the YouTube password so we can't get in.
He'll be looking, lurking.
Oh man, guys, the show is so great. I love connecting with you guys. I love laughing. What you see is what you get, and you've got to have a good time doing this. You can't be stressing out about each and every trade. Just enjoy it. Find some friends. Connect on the Discord channel if you're a TSU student. If you're just kicking the tires, that's great. We're glad you enjoyed the show. I will sign off and let Chris and Scott do the same. But thanks for being here, everybody.
Yeah, David said in the chat, happy Easter to everybody and your families as well. Hope you guys have a fantastic weekend. If you're watching on YouTube, make sure you subscribe and hit the like button. I don't think we've hammered that yet today. So it really does help the algorithm. If you've enjoyed the show, other people probably like it as well. So if you give it a like, it helps them see our videos more easily. So we'll go ahead and wrap up there. Scott, you get the last word.
I appreciate you both. Everybody have a happy Easter. Thanks for being a part of this day, and makes it a lot of fun for everybody to be involved. Appreciate you guys, and I'll see you guys next Thursday, same time. Bye.